Hi, welcome to valuationpodcast.com, where we discuss all things related to business and valuation. I'm Melissa Gragg, a company valuation expert in St. Louis, Missouri. I have the pleasure today of discussing COVID-19 business interruption insurance claims with Chris Johnson. He's an economist in Houston, Texas, with Economic Analytics Consulting. He also does valuations, and that's kind of where we met. Welcome, Chris.
Well, hi, Melissa.
How are you?
I'm doing great. This is the special at-home version, like the late night show host, right?
Yes. Hopefully we don't have any crazy kids running through the back of the screens or anything. But
I have a middle schooler learning cello if you would like a special guest appearance. It produces excellent sounds.
Right. Well, let's get straight into it. Really, this is kind of a hot topic for businesses right now that are going through some issues and have lost some business income. But just tell us typically, what is business interruption insurance and what does it provide?
Absolutely. So it's really a separate policy or an addendum to existing insurance policies that really covers what you said. Lost business income. So you're looking at an insured event or a peril that occurs. What you have through your normal policies, if there's a fire and it burns down your building, the other policy is going to rebuild your building. But what happens if your business is out of operation during that time period that they're rebuilding it? So that's where business interruption coverage comes in, and that it's going to help make you whole in the lost income that you've lost. Now, it also covers any of your mitigation expenses that you had to incur. So when you try to do something to mitigate the loss, whether you're mitigating a physical loss or you're trying to redo your business operations, it can also cover some additional expenses if you have to acquire new equipment and try to continue your operations as best you can to mitigate those losses. It'll make up also your existing obligations and payments. So rent, mortgage payments, other expenses, taxes, payroll that you have to incur during the time period where your operations are down. And it's really just an additional policy that's going to try to help make you whole when a covered event occurs.
And so typically the people, that have business interruption coverage have kind of have it as an addendum, like it's an addition to your normal business insurance, right?
Usually, sometimes it's included in a standard policy. There's a little bit of coverage that's in there. Other times it's a standalone. Most of these policies are not large policies. They're subject to waiting periods of like 1 to 3 days. And then there's a restoration period. So it's not going to cover your, trying to get your business back on track over a period of years, but it'll typically be something on the order of 12 months or less. And so you've got this time period that it covers you. The limits are not always very high. They're subject to deductibles like most insurance. So a standard policy may include a level of business interruption coverage. A lot of people that are very concerned about it, they'll go and get their own standalone policies. Related to this, and as we start talking about the COVID aspects, there are other similar policies, including pandemic policies that were put into force within the last decade, as we've seen various different pandemics around the world, just different options that were offered by the insurance companies.
Right. And I was reading a little bit, and we talked about this earlier, but like Wimbledon had canceled for the first time in 45 years. But I guess after the 2003 SARS outbreak, they bought pandemic insurance and had paid like $2 million a year in the policy, but it ended up paying out a bunch.